Hello everyone, and welcome back. It's been a while since my last lecture, since the last video has been uploaded. Some of you have been getting impatient. As a successful, profitable, consistent trader, as a professional in the industry, you must understand that patience is the most important quality that a trader can have. Without it, you would not be successful. Now, what is this lecture all about? Well, firstly, you guys have spoken. I have seen it. Do not worry. Many of you want a 4-hour model. I promised that I would release a guide on a 4-hour CRT model. Not any 4-hour CRT model, but my favorite CRT model that I have access to. This will be a straightforward, refined guide on how to execute my personal favorite 4-hour CRT model. There are many more models available within this textbook alone. However, I will only be revealing the 4-hour model in today's lecture. The private members, of course, will get access to more models a lot quicker. The private group is closed and will remain closed until October. It will then reopen and monthly subscriptions will start. What is this private group? I live trade 3 days every single week. If you want to make money alongside me, if you want to take the same exact trades that I execute, this group is for you. Now, if you do not like live trading sessions, but need more guidance around CRT and turtle soup, then feel free to join, as well as I host weekly Q&A sessions where you will all be allowed to speak directly to me. Those of you already in the program know exactly what I am talking about, where I allow every single member to join the stage and ask me questions personalized to their own challenges. Let's put it that way. Without boring you anymore, let's dive right into this lecture explaining the 4-hour CRT model. So, many of you have probably been wondering which hour of the 4-hour candle, which specific 4-hour candle are we going to be looking at? I have hinted at the 5 a.m. candle, as 159 rules the markets. However, we will be focusing on the 5 a.m. 4-hour candle, specifically for Forex. This is called the 5 a.m. CRT model. Very straightforward, very simple. The 5 a.m. candle on a 4-hour time frame is the CRT range, a high probability timed range. Credential number 2 is, of course, a 15-minute CRT formation at the highs or lows of the 5 a.m. CRT. This in itself is a second confirmation, a lower time frame CRT within a higher time frame CRT. Credential number 3 is the purge, specifically during the 9 a.m. hour up until the 10:30 a.m. is accepted. This means that price must turtle soup one end of the 5 a.m. 4-hour CRT range between the hours of 9 a.m. and 10:30 a.m. This is confirmation number 3, a timed purge of the CRT. Credential number 4, some may say this is the most important. This is where you come across your entry. How do you enter the trade? There are many ways, but I will explain two. Enter when the second candle of the 15-minute CRT closes, or for more precise and advanced entries, enter off of a 15-minute, 5-minute, 3-minute, or even a 1-minute order block. The lower the time frame, the more precise you can get if you master it. If you are a beginner, stay away from the 1-minute chart, stick to the 15-minute and 5-minute, and locate an order block, as if you only enter when the second candle of the 15-minute CRT closes, you will likely take more losses, as there are other variables to consider. This is how simple it gets. This one model alone can retire you and your family. And I am not joking when I say this. If you needed to choose one model to trade for the rest of your life, this should be top 3 on the list, if not the only one on that list. Very, very straightforward. Easy to apply, visually clear to find on your charts. Remember, for every single CRT that you want to execute, there must at minimum be 3 levels of confirmation. One of them being a timed CRT, a high probability timed CRT. This is confirmation number 1, 5 a.m. That is confirmation number 1. Confirmation number 2, a timed purge, a timed CRT. This is confirmation number 2. Confirmation number 3 is a lower time frame CRT within the higher time frame CRT. The 15-minute within the 4-hour. Now, to dive even deeper, confirmation number 4 would likely be the key level coming from a daily time frame. Why a daily time frame? Because if you have a 4-hour CRT, the key level must come from a higher time frame, and that higher time frame being the daily time frame. Everything that I have just explained, although it might have been explained in a short period of time, is literally all you need. So rewind this, rewatch it, pause it, and take all the notes that you need, all the notes that you can. This lecture is going to be very different, as it will no longer look like a slideshow. We will dive into the charts and start working together, backtesting, and understanding how this 5 a.m. model actually looks like when trading Forex. Let's dive right into it. All right, taking a look here at Euro USD on the 4-hour time frame. We're going to head over to 5 a.m. 5 a.m., as you can see. Let's take a look at what is happening right here. Is this a valid setup or not? Hopping down to a 15-minute time frame. So step number 1, before you even look for an entry, is to wait for the 5 a.m. 4-hour candle to finish forming. It finishes forming at exactly 9 a.m. Now, once that candle is formed, you would draw the high and low. In this example, they are depicted by these 2 red lines. Let's write it down here. 5 a.m. 4-hour CR low, candle range low. Here we write 5 a.m., 4-hour candle range high. Now, on the 15-minute time frame, we are looking for a CRT, right? The lower time frame CRT within the higher time frame CRT. That lower time frame CRT being a 15-minute CRT. The turtle soup of the 15-minute CRT and the 5 a.m. CRT, 4-hour 5 a.m. CRT, needs to happen between the times of 9 a.m. and 10:30. As you can clearly see here, a very, very clear 15-minute CRT. I will draw this out with blue lines instead. All right. The purge of the 15-minute CRT and the 5 a.m. 4-hour CRT occurs at exactly 9:45. This is a valid timed purge. All right, we have a timed CRT, a timed purge, and a lower time frame CRT within a higher time frame CRT. The first entry that we spoke about, that I spoke about in the slideshow, in the slide that you guys saw right before this example, tells you that you are able to enter a trade as soon as the second candle of the 15-minute CRT closes. That means your entry would have been right over here. Of course, you take partials at the midpoint of the 4-hour CRT. And of course, you finalize your trade at the high of the CRT. Now, of course, there are different ways to take partials. This trade hit your take partials. Now it continued going higher into the rejection block. If you had a partial right here, that would have been a great idea as well. Now let's dive deeper into a lower time frame entry. Taking a look at a 5-minute chart. Now, keep in mind, if you have a 15-minute CRT, your order block will likely come from a 1-minute time frame. However, as you can see in this example, a 5-minute order block has formed as well. The lower the time frame, the more precise your entry. However, the more complex it might get. So that's why I would suggest moving down 5, 4, 3, 2, 1. If you see one on the 5-minute, execute on the 5-minute. If you see one on the 3-minute, execute the 3-minute, the 2-minute, 1-minute, etc. This is all discretionary. You choose what you are comfortable with. Backtest and find out for yourself. For example, if we were to enter the trade on the 5-minute order block, you would have a 9.44 R to R trade. This is a 5-minute order block entry. You take partials at the midpoint of the 4-hour CRT. Partials would have been hit. And if you're executing this low, you can also take partials at the 15-minute CRT high. And the next partials would be, of course, at the EQ of the 4-hour CRT. Now, dropping down time frames even more, down to a 1-minute time frame. Let's try to locate an order block. Order block formed. These two candles are an order block. Very important to understand, this is not random. These two candles together are the order block. Tapping into liquidity. Let's draw this in black. Bullish order block. As soon as price closes above this second candle to the left of the low, you can now consider an entry. Your entry would have been right over here. And if you missed it, you had a second chance to enter during the OTE event. The last trade that was executed was a 9.44 RR trade. That was executed off of a 5-minute order block. Now, if you go to the 1-minute time frame and refine your entry as most as you can, then your R to R would change and become 10.82. This in itself is an amazing trade. Now, many of you guys are probably wondering and asking yourself, where is the key level? Why is there no key level shown? I want to make something clear. You need minimum 3 confirmations to enter a trade based off of CRT. 4 is better than 3, but 3 is still acceptable. In this situation right here, this 5 a.m. 4-hour CRT, we have 3 confirmations, which are number 1, we have the timed CRT. Now, what time is this timed CRT? 5 a.m. on the 4-hour time frame. Now, confirmation number 2 is the timed purge. The timed purge. This is the timed turtle soup of the 15-minute and 4-hour CRT. This would occur between the hours of 9 a.m. and 10:30. Confirmation number 3, the lower time frame CRT within the higher time frame CRT. This is the 15-minute within the 4-hour. Confirmation number 4 would be key level. Now, as I said, the key level is not necessary and not obligatory. However, I would like to mention that it will increase your trades by a lot. It will increase the hit rate and win rate of your trades by an extremely large amount. My suggestion to beginners is to only execute trades when there is a key level involved. If you are questioning the key level, do not enter it. Now let's go ahead and hop onto a daily time frame to look for a key level. A key level using the 4-hour CRT will come from a daily time frame. So let's write this down. Key level for 5 a.m. 4-hour CRT will come from a daily time frame. All right, let's hop on to a daily time frame and verify if there was a key level. Very visual, very clear, visually clear here. We have a daily daily fair value gap that is being respected. Price dug into it, wicked into it at first, closed into the order block. Price then continued down. Sorry, I said order block. I meant to say fair value gap. Price dug down to the low of the fair value gap, wicked below it, came back above. Daily CRT formation within a key level. The PD array right here is the key level. And then price started to reverse back up. This to me is bullish. The key level, of course, is this daily fair value gap. Let's go ahead and see on the 4-hour time frame if that's exactly where price started to reverse. So remember, key level for the 5 a.m. 4-hour CRT will come from a daily time frame. This is the key level. Let's use a line to help us depict the key level here. The high of the fair value gap. On a 15-minute time frame, it will be easier to see. Key level right here at the bottom. 15-minute time frame. As soon as we turtle soup the 15-minute CRT, price hit the key level and started to reverse. So in this example, we have 4 confirmations. Key level in this example would be the bullish PD array. Which PD array is it? In this example, it is the bullish fair value gap, the BISI. All right. Very, very, very straightforward, simple, easy to see, very clear. Now, on a 5-minute time frame, you would see that the order block was created when tapping into the key level. Let's hop down to a 1-minute time frame. And I want to point something out. I will hint at this. You guys go study this on your own. When price hits the key level, on the 1-minute time frame, we have a CRT. The CRT instantly respected as soon as we turtle soup below. When hitting a key level, then price immediately reversed. Your entry long could have been down here, where as soon as this candle closes, stop loss at the low, and your take profit at the 4-hour CRT highs. This would grant you a 68 R to R trade. Now, of course, this is hard to execute, but I am showing you what you need. This is one part of the equation, key level from a daily time frame. While within a 4-hour order flow model, you have the 1-minute CRT while hitting the key level. This is a very advanced model that you can learn if you try to dissect what I'm trying to explain here. Now, that's enough for this current backtest on the Euro US dollar. Very simple, straightforward. If you need to rewatch this, rewatch it as many times as you can. Moving on to the next example. Hopping onto the British pound US dollar chart, GBP USD. We're going to look at the 5 a.m. 4-hour CRT. Instantly, this one pops out right here, exactly 5 a.m. 4-hour time frame. You know what? For this example, we will use the backtesting option here. I do not like using this, and I do not recommend you use this. However, for this example, we will. Let's rewind time up until the 5 a.m. 4-hour candle. This is a step-by-step guide on how you would go about executing this. Step 1. Draw the high and low of the 4-hour. Let's do the hour 4, 5 a.m. candle. $5 a.m. candle, 4-hour time frame. Let's go ahead and draw the low and the high. Step number 2. So step 1, draw the high and low of the hour 4-5 a.m. candle. This in itself is confirmation number 1. So let's write that down. Number 1. All right, step number 2, drop down to a 15-minute time frame. And locate a 15-minute CRT at the low or high of the 4-hour 5 a.m. CRT. So this 15-minute CRT is the lower time frame CRT within the higher time frame CRT confirmation. Now, where is this CRT? You want the purge to happen between 9 a.m. and 10:30 a.m. So we wait until 9 a.m. We have a purge of liquidity at 9:30 a.m. Right on the left side of this purge, we have a 15-minute CRT. Let's draw this out. Step number 2 is to locate a 15-minute CRT. Now, can you enter the trade right here? Yes, of course you can. Your entry would be right here, and you would be targeting the opposing end of this range. Targets and stop loss placed. Your partials would occur at the midpoint of the 4-hour CRT, right here. And you can take partials once more at the 15-minute CRT high, and then final profits at the 4-hour CRT high. Entry would be here with a 4.54 R/R trade. Dropping down to a 5-minute time frame. Before we drop down, let's just write this out. Step number 2. Step 2. Locate a 15-minute CRT within the 4-hour CRT with a turtle soup between 9 a.m. and 10:30 a.m. This in itself is 2 confirmations in one. We will write this down. Confirmation number 2 and number 3. What are the confirmations in step number 2? First confirmation in step 2 is the lower time frame CRT within the higher time frame CRT, the 15-minute CRT within the 4-hour CRT. Confirmation number 3 is the timed purge, the timed turtle soup between 9 a.m. and 10:30 a.m. Dropping down time frames to a 5-minute to locate your order block. You can see one right here. However, I want to make sure that there is no other clear order block on the lower time frames that I may prefer. 3-minute time frame. We have a thick candle. I'd like this more than the previous one. On the 1-minute time frame, we have a thick candle as well, turtle souping a low. This is a valid order block to take. Why? Because it is taking out liquidity and it is a thick down close candle. Let's mark this down as our our bullish order block, the entry. Let's wait for our entry to happen. So it seems like price tapped into the breaker and immediately started to reverse. This is the 5-minute order block and the 3-minute order block as well. No, not the 3-minute. So price taps into the 1-minute order block here. You would be entered long, taking out our entry right here. Entry long, targeting the opposing end of the 4-hour CRT range. Stop loss at the swing low. Your R to R now becomes 9.75. Of course, you take partials at the EQ of the 5 a.m. CRT range. And if you want, once more, take your partials out at the 15-minute CRT high before finalizing your trade at the opposing end of the 4-hour CRT. Now let's take a look at what happens with price here. So 3 confirmations, 1, 2, and 3. Let's go ahead and check on the daily time frame for a key level, just in case we have a 4th confirmation here. All right, just visually speaking, I can clearly see a daily low within a fair value gap. The fair value gap coming from a daily time frame with the daily low inside of the PD array. This daily low is a key level. Let's mark this down. We now have 4 confirmations for the trade. Dropping back down to a 1-minute time frame. Let's locate the key level, confirmation number 4. All right, dropping down to the 1-minute time frame, you can see that the 4-hour CRT formed while hitting the key level. This is a high probability 4-hour CRT. This is one that you want to be executing. Then we have the 15-minute CRT within the 4-hour CRT, 2 confirmations. The timed CRT, that's a 3rd confirmation. And the purge between 9 a.m. and 10:30 a.m., that is the 4th confirmation. 4 confirmations, entry long off of the 1-minute order block. Let's go ahead and see what plays out over here. Price reverses. Let's go up to a 15-minute time frame just to speed things up. Partials would have been taken twice. And if you would have taken more partials above, then you would have made more money. Let's go ahead and see if the opposing end of this 4-hour CRT range ever is hit. Regardless of that fact, you would still be making money even if you get stopped out here, because the 50% of the range has already been hit. As I've mentioned in my first couple of videos, the 50% of any range is likely to cause price to reverse, or at least form a turtle soup. Now we broke past the high once more into a rejection block. Another partial could have been taken here. Let's see if the opposing end is finally reached, and it is not. You would have been stopped out. However, multiple partials would have been hit. And if you only focus on taking trades targeting the EQ of the 4-hour CRT, your win rate will be much, much higher. For those of you who are interested, I would very much recommend to backtest that scenario. So as you can see, the trade would have been a 9.75 R to R compared to, on the 5-minute time frame, the trade would have been 4.23 R to R. That is the power of dropping down time frames. Now, my private students already know this. The only reason I am mentioning this to you right now, if you are still watching this video, is because it is right in front of me. When you see a CRT within a PD array that is supposed to push price up, meaning after a change in state of delivery, if you see a CRT on the lower time frame within the order block that caused the change in state of delivery, then that is a highly probable CRT range and can be executed on the lower time frame. 5-minute CRT within a 5-minute order block. As soon as this candle were to close, your entry could have been right here, aligning with the 1-minute order block. That is going to be it. This is a quicker video than most. Very clear, visibly clear to understand. I did not complicate anything in this video. Everything was made simple, direct, and to the point. You will probably need to watch this multiple times. Those of you who are advanced are probably annoyed with the amount of repetition I have done in this one video. However, it is necessary for the beginners and also for the advanced students. With that being said, good luck trading, and I hope you have a nice one.